how does one determine if the fraud is material or not? Materiality is determined by both the amount and the nature of the transaction. For example, what if you discover that your client gave a bribe to a government official? The amount is relatively small. Would you consider this material or immaterial? Tough question, right? Here's the rule of thumb. An item is immaterial if it is both trivial and inconsequential. In the case of our example, the amount is small, but the consequences are grave. What if the bribe is publicized? What if your client is discovered? He could subsequently lose his license to operate his business. Therefore, to know whether a misstatement is material or not, take a look at its amount and nature. But then how would you know that an amount is material? This, my friends, is where professional judgment comes in. That is why materiality decisions are often left to more senior members of the audit team because they are more experienced and more knowledgeable of the client. Another question that was asked is, what is the role played by the government, such as the BIR or the LGU, in the prevention and detection of fraud? I love this question. You see, at the end of the day, deterring fraud is a matter of the culture that an economy has for or against fraud. Countries with a tough culture against fraud often incorporate measures such as required external FS audits, together with stiff penalties and sanctions for fraud perpetrators. I have found a very interesting research paper in this. Check out the abstract of this paper. I have included the link in the description box below. Up next, is there such a thing as a non-financial fraud? And what is the auditor's response to this? See you in the next video.